So let's start with a round of introductions. So please, Alexander.
Yeah, is it on? Yeah, okay. So Alexander Schläpfer, Swisscom Ventures. In very few words, so Swisscom is Switzerland's leading telco and IT systems integrator. We are the corporate venture arm, but we are not just investing Swisscom's money. We're managing two funds with institutional investors. So 75% of the investments we're making, the money is actually from financial investors, pension funds, and so on. Our focus areas are, of course, IT, cloud infrastructure technology, enterprise SaaS applications. And then in Switzerland, we do invest in deep tech topics, so robotics, semiconductors, but only in Switzerland. So here in Israel, we have 3 companies we're invested in: Fireblocks, Cato Networks, and Securithings.
Hi everyone, my name is Paulina. I'm head of venture capital at DB Schenker. I just did a reverse pitch, but I can wrap it up for you again. So DB Schenker is one of the biggest logistics companies in the world, covering air, ocean, land transport, contract logistics. With a CVC, we invest in Europe and Israel, early stage, so C to Series B, but focusing mainly on supply chain management and logistic topics, or adjacent markets, deep tech topics that kind of fuel the industry or will shape it in the future.
Hello? Yeah. So, hi everybody, my name is Michael Sickert. I'm the managing partner of Speedinvest. Speedinvest is one of the leading European VC funds. We specialize in pre-seed and seed rounds, go to Series A usually. We have 6 verticals: software as a service, marketplaces, industry tech, deep tech, and health tech. And have just raised our 4th fund generation and now have around a billion committed capital. Yeah, happy to be here and to discuss the questions.
Hi everyone, my name is Gadi. I'm one of the partners of the venture arm of the Bosch Group. Bosch, I assume you all know to some extent. It's a very old company, been around for about 140 years old, very diversified. The first number 1 tier 1 automotive provider, but also has activities in home appliances, industrial technologies, some healthcare, some building technologies, so a very broadly spread out company. I run the office in Tel Aviv, and our venture arm has been around since 2008. We have a team of about 24 people around the world, offices in Europe, in China, Israel, and the US. And we're typically, I would say, an A or B round investor at the moment, investing out of our 5th fund, which is a 250 million euro fund. And doing quite a lot actually in Israel, probably about 10 or 12 investments over the years, and generally an active investor with the companies that we support. And happy to be here and answer any questions and meet you guys either on this panel or later.
So I just counted, correct me if I'm wrong, we have like 800 million euros lying, sitting on the stage here. So, who wants something? In the first row. Yeah, so, okay. Now, let's start from the end. I know I'm going to the US. I know that I will probably be acquired or I go for an IPO. But how do I exit in Europe? So, maybe Michael and Alexander, would you like to take this?
Well, you can actually IPO also in Europe. You know, then you have the entry standard markets, so you know, Paris, London, AIM, and Euronext. You can also in Norway, particularly if you're, you know, have a focus on the energy industry. So Norway, Oslo has a Nasdaq spin-off, so you can list there. But of course, you know, if you want to get access to the big institutional investors and so on, the proper Nasdaq is still probably better. Then there are, of course, M&A opportunities, and we have, of course, you know, big enterprises, some of them here on stage in Europe, that are looking to make acquisitions. They're not as big, you know, as maybe the Silicon Valley tech companies, so don't expect multi-billion-dollar exits in Europe. But, you know, there are several large enterprises that can make a $500 million or even $1 billion investment.
Okay.
So I would totally agree. I mean, obviously, the US has a clear advantage when it comes to very high-priced IPOs. However, in Europe, the only thing I think you were not mentioning was Sweden, which has a very lively tech scene and certainly also has quite a broad and deep stock market for specific areas. So an IPO is obviously possible. There is also more and more institutional investors that are open to this. But I mean, we do not have to discuss that in the US. There is even more money, there is even more investors, and there is even more professional environment for IPOs. In terms of strategic buyers, I think you mentioned already there will always be around. I would add financial sponsors, of course, that are here, and more and more American companies also looking for interesting situations here in Europe. I mean, what is true in Europe is that Americans, and that's our big advantage, Americans are mostly focused around the English-speaking hubs, right? Which is mainly London. And if there is companies in specific in Germany, in France, in Italy, or in Israel, then it might be of an advantage to have local know-how and local people on the ground that know the scene and the companies best. So for these medium-sized exits, that could be of a big advantage. Of course, if you're a multi-billion dollar company, then the golden way is to go to Nasdaq and list there. Yeah?
Thank you. And for Gadi and Paulina now, when I'm an Israeli entrepreneur, I'm looking for money. Do I have to still send you a business plan and forecasts, or can I just send over a deck and be over with that?
I think when you reach out, the
Israeli
situation is
entrepreneur,
different. Yeah. But in general, it's more than a pitch deck. It's more than a pitch deck. Definitely right now in the current funding environment, I think it's not news to anyone here. Money is tighter. So what investors are looking for, you probably as well, but I'll speak for Schenker Ventures right now. We look for companies that know how to manage their cash, that have the environment in their mind, that know when to grow and when to keep the cash together. And we're also looking into companies that are much more into direct return on investment for their customers. So right now we're not looking a lot into companies that do a bit of optimization, that go too much into moonshot, but rather into companies that have a immediate return on investment for their customers, because also the customers' money right now is a bit tighter. So if you want to succeed in the investment for Schenker Ventures right now, this is those two items.
And Gadi, how does it look? Can I just send you my pitch deck and
of course
get money? I mean, will you require a business plan after that?
No, just send me the pitch deck and I'm sending you the check right
great.
back.
Well, let's split on that.
Of course. I don't think it's any different than any other geography. So I think investors are investors and they try to be professional as well as serious and responsible in the way they manage their money. So if you send me one pager or a full deck or a whole business plan, at the end of the day, if I would like to make an investment, then we would look at everything. So in order to make an initial contact, fine, send me a teaser, one pager. But very quickly, you would need to, show what you actually do and what your plan looks like, and this is a serious company. I do agree that at the moment the flavor has changed in the market, and I think doubly so in Europe, because to begin with, Europeans were not exactly a culture that likes burning piles of dollars in the backyard just for the sake of growth. And I think at the moment, frugal and responsible growth is very, very important to investors. So even if I see a really interesting opportunity, if this company needs to, go through $30-40 million a year for the next 4 years, it's a more challenging opportunity for us. And that's also, kind of a company culture. Bosch is a very cost-conscious company. That said, I think there's actually in Europe a lot of interesting opportunities nowadays that were not so the case maybe 5 years ago. One of the reasons is the division between the US and China. So the European as an exit to target market has become more relevant and more interesting.
Okay, so maybe Michael, which I guess you're the only one who will do really early stage, like pre-seed, seed investments. So can I do with a pitch deck, or do you need a business plan, 5-year revenue forecast, and?
I mean, clearly it's a different set of expectations when you are preparing for an IPO or if you're sending a pitch deck to a pre-seed or seed fund. That's very clear. However, the same holds true that the better the pitch deck, the more comprehensive the business plan, the more basically the signaling that you know what you're doing, you know where you're heading, you know what you want, the better, right? And therefore, of course, a startup that is not even founded, that is pre-seed, might not have a 5-year business plan, but I think to know exactly what one wants and what one is aiming at does help in a pitch, yeah. And doesn't matter how many pages the pitch deck has, it just has to make sense.
Thank you. And Alexander, to you, what is like, you're more focused in B, A, late A, B, and growth. What is like really significant for you? You've invested in 3 Israeli startups already. So what are you looking at, given that it's a non-Swiss, non-European startup?
I think, key for us is validation of the customer value that you're producing. So really, ultimately having a good reference that I can talk to, that enthusiastically endorse your solution and can tell me quite specifically, how you have changed things for them, how much money you have saved, or how much additional business you have generated for them. That's for me key. To see traction and to see the value, obviously behind it. You wouldn't have traction if there was no value, normally, except Swiss banks maybe. But so now I think that's where you need to focus on, in particular when you're starting to raise Series A, to have very good customer use cases, good customer references.
Okay, thank you. Any questions so far? Nothing you'd like to know? Please.
What would be the preferred investment for the company? Thank you. What would be the preferred investment for you? A company that is oriented towards an exit, or a company that is oriented towards building a business?
So we are exit oriented. Not every strategic investor is. Yeah, there are a lot of strategic investors that look into preparing kind of an M&A transaction or want to get more involved with the technology development, product roadmap. However, we are very much interested in an attractive exit scenario and a financial return.
I have a bit of a different view. I think companies that are focused on an exit very often don't get there. I think companies need to focus on building the real value and becoming successful businesses. An exit happens as they grow and become successful. So if I see a set of a team of entrepreneurs who comes and says, yeah, this is what we're going to do and we're shooting for this exit as a technology sale, this is a no-go, right? Because usually you cannot time the external factors. You can only build your own value. And if you build your own value dramatically or well enough, you're going to exit at some point in time in one way or another. So, my view.
Again, now just a third opinion. Obviously, I don't like teams who like to do a lot of research, to spend the rest of their life researching a question. And exits are not easy to come by in general, even for very successful startups. So a certain focus on, moving on to the next stage and exiting the companies is desirable. But yes, I agree. Someone just sort of dressing the company for a quick exit, that wouldn't be interesting for us either. It's important you have the business in mind. You want to build a business that's sustainable, but then do keep an eye, and your investors will also push you to keep an eye on the exit route.
What it might help on, if you do right from the beginning, you have a rough estimate of a potential exit valuation. It's a good check of how big can your business get, and that's a problem that we are seeing quite frequently in the many pitch decks we get. We get very early stage companies. And they might be great founders and great companies, but they are pitching for opportunities that are probably very small. And what you don't want as a fund, but what you eventually do not even want as a founder, is end up in such a niche that you can never achieve a meaningful business.
Fully agree. I think eventually, at the end of the day, when you have a company opportunity at your hands, there's things you can change and things you cannot change. You cannot change the market. If there's no market, there's no market. You cannot change the people are the people. So if they're good people, if they're very talented, fine. If they're not, then usually not. You can hire other people, but the technology you can change, okay? The business model you can change, but not the market, not the people. So these things have to be solid. And having a large opportunity is by far the most important factor other than people, in my view.
Thank you. Any other questions? We have time for one more question. None. So I'll ask a question. In your view, since money is scarce tight at these days, as an entrepreneur, what should I go for? Maintaining cash flow and keeping the company alive on cost of scale, or should I really push scale, bring some more proof, and try again to get money?
I mean, if I go first, but I think we heard it before here. I mean, key is that you survive the crisis, right? And key is that you hold the monies together until the window opens again and financing environment gets friendlier. Clearly, if you invest monies now and there is no additional financing, then you might get insolvent. So I think the recommendation of the day certainly is to be, as was said before, frugal and try to really carefully use your money. Yeah.
Okay. Our time is up, but do we have Berlin online? No. Okay. So we have 3 more minutes. So Alexander, you wanted to say something?
Yeah, I mean, That's obviously maybe more difficult for the very early stage companies, but let's say the Series A and B companies in my portfolio, I think with all of them, we've gone through the exercise of making a plan. How do we get to break even within, with the cash that we have in the bank right now? And then on top of it, a second plan or an add-on plan, to grow faster with not necessarily the break even in sight. How much additional money would we have to raise? And that's essentially a plan with whom then we're trying to win new investors. Look, we have a base plan that's going to break even, and this is essentially the over and above plan, and for that we're raising 5 or 10 or 15 million. And that works actually pretty well. Because that gives new investors some level of security that the company can reach break even, and also that these new additional investments will pay back fairly quickly.
So thank you. Thank you, dear panelists. It's time to thank the panelists, please.